Now, with more on Brexit and the markets, Marc Ostwald joins us now from ADM Investor Services. Marc, good morning to you. What were your initial reactions to what you saw last night with this large rebuttal of Theresa May's proposals?
I think really what it emphasised was that what we've known all along for the last 2.5 years. What Parliament knows is what it doesn't want. What it doesn't know is what it wants. And I think it's fairly safe to make the observation that Parliament's very good at rejecting things, but it can't actually find a majority for what it actually could be achievable. So Mrs May can go backwards and forwards to Brussels and then maybe try and tweak the withdrawal agreement that she came to, but it's never actually going to get any traction in Parliament. So really the key job now is for Mrs May to reach across the whole of the House and find out if there is anything. I mean, it's not actually clear that there is actually anything which a majority in Parliament would back. So that's a complex process. It leaves us still with a strong impression that no one in Parliament, and this is perhaps the surprising thing, Mrs May will probably win the confidence vote today. There's no reason to believe she won't. But there's actually no one else in Parliament who really wants to own the poison chalice of managing the Brexit process, and that's actually part of the problem, because everyone knows that it's probably not actually, in terms of your political career, a great thing to manage. Mrs May seems to be resolute in carrying on. The Europeans are going to be looking on and saying, well, what's the point of negotiating when this has been so roundly rejected? You tell us what you want. And the onus is now on the UK to tell the Europeans what they want, because they've never actually expressed what they want.
So in this situation, let's look to the markets for some leadership. What are the markets telling us? Because as I said, we've got sterling pretty much where we were as we went into late trade yesterday.
Well, the markets are actually telling us, can we have actually some leadership from the UK Parliament? Forget specifically Theresa May. They would like to actually see some clarity, because what we've got is an ever denser fog about what the UK really wants, and that's where the problem lies. So really what this is a recipe for is further volatility within recent ranges, broad ranges, one would have to say. There's nothing that the Bank of England can do other than sit on the sidelines as an interested observer and ensure that there aren't any liquidity problems. For businesses in the UK, for some, we have probably got to a situation where they have to start making some quite tough decisions in terms of contingency plans. Do they start to implement them? Do they have any confidence that this process is going to actually find an end anytime soon? In terms of outcomes, I think there are still a lot of people who think there's going to be some sort of soft deal. I'm not really convinced. I think the two options really on the table still are either it'll be a hard Brexit and UK goes on to trade under WTO rules with all the consequences, which in the short run will be a big hit for the economy, but in the long run it'll be manageable, or Article 50 is withdrawn and you take the social consequences, because there will be people on the hard Brexiteer front who will protest that very, very vigorously.
Let's go back to the point you make about the short-term disruption from what would effectively be what some people say is crashing out, but as you rightly say, it would be moving on to a structure of WTO terms in terms of trade tariffs. What is the short term? How much disruption should we expect over what period?
Well, it really depends when it actually happens. I mean, I think in the current situation, my guess is the EU's negotiating stance is, tell us you're going to have another referendum and we'll be quite happy to agree to a postponement of Article 50. The only problem with that is that obviously we've got the European Parliament elections in May, and there are certain countries, particularly ones with vested interests like Spain, with regards to the Gibraltar problem, who will want to make sure that that referendum takes place as close to, if not before, though it's quite difficult logistically to organise it, before the European parliamentary elections. So there are a lot of challenges and a lot of decisions to be made in the near term. If it ends up with a hard Brexit because no one wants to back a second referendum in Parliament, then the challenges will be primarily related to the goods sector. The financial sector less so, because there's already been a lot of contingency plans at least put in place for the next year to ensure that there isn't any major disruption to financial flows, because London is a major financial hub. But for other things, above all, things related to pharmaceuticals, certain types of foods, certain types of goods related to the auto sector, in terms of parts, there will probably be some problems. It's not 100% clear what would happen with air travel services. They will continue, but the question is, how many problems will that result in, either in terms of passport control or anything along those lines?
So in that, after that short term, whatever that period is it then lift off for the British economy once we get our new relationships in place, or do you consistently see the UK underperforming on a consistently long-term basis because we do not have that strictly tied in relationship with the European Union?
There's two things which are critical to that. First of all, what would happen in a hard Brexit situation? Does the UK renege on the withdrawal agreement, on the sum agreed, which is basically commitments it's already made? I would remind everybody, it's like exiting a mobile phone contract early. And secondly, what sort of supply chain disruptions are there going to be? Because above all, if we go into regulatory misalignment, because it is the non-tariff measures that exist, which basically means everyone operates to a same standards for the production of goods. And if the UK decides that it wants to agree with certain things with America, then the UK will be in misalignment with the EU, and then there will be problems, because there will have to be a lot more checks on goods which are being traded between the EU and the UK, and that will take quite a long time to resolve.
Let's bring up a chart of sterling against the dollar, and this dotted blue line, vertical blue line here on the left-hand side of the chart is the referendum day. Since then we've seen a loss of around about 15-16% for sterling against the US dollar, but we have found support at 126.61, currently trading 128.80. 128.60. What sort of degree of decline would you see on this sort of chart here? What sort of levels would you be looking out for in terms of support if there were to be WTO, Brexit, crashing out, whatever you call it?
Right. I think the important thing to observe is the big level on that chart is 125. It's where all the option hedging is, and it's whether that level can hold. That's where people have assumed for the time being that we hold in, and one can see it's a fairly significant level. If we slice through that a little bit like when we slice through $60 on oil, you could easily do 120, 118 in a matter of moments. And beyond that, I think people will probably think it'll be even worse than that. It really depends then what the Bank of England decides to do.
Well, I was going to say, actually, if it is a quick dip down to those levels, the Bank of England doesn't have any time to do anything. I mean, they're talking about raising interest rates if sterling has a long time at those sort of levels. Is sterling going to have a long time at those sort of levels, or do you see sterling bouncing back because it's been oversold?
I think actually for a lot of people, they'll start to look at it and they will say, well, that's actually quite oversold. There are, given what we've discounted in UK stock prices, a lot of cheap stocks available, and with the currency fall, they're going to be even cheaper. And so there will be people looking to come in. It really then is going to be a question of how well the UK manages the process of saying, right, well, let's roll up our sleeves and get down to business. So I think there will be a sharp fall, quite a sharp rebound, because people look at the cheap assets, and then we go into a period of actually calming down, having seen all that volatility, and people saying, what are the real long-term opportunities here for long-term investors?
Long-term opportunities, long-term investors, that's what I like. Mark, thanks indeed for joining us. Marc Ostwald from ADM Investor Services.